Friday, October 25. Go Buffaloes, beat USC. Odds are not good. This is an odd moment in the financial markets, especially for interest rates. A year ago, right now, the all-definitive 10-year Treasury note reached 3.25, and it did it twice, known as a double top. Since then, we have come down in a straight line, all the way down where we are, and down to 155, and then again 155, a double bottom. The trend line and the doubles are not to be trifled with. Trend lines are very powerful, but weird in that their power comes because they keep going, and they keep going until they stop. And when they stop, they tend to reverse. And there's no bigger marker in charts of a reverse at hand than a double top or double bottom. Fed meets next week. Fed's likely to cut the overnight cost of money, and it's likely to say we're more likely to do more of that. But my hunch is in the near term, rates have bottomed for sure. We may even go up for a while, although I don't think the economy or housing, even as healthy as housing is, can tolerate much of an increase. Housing health is weird. All the demand is in cities and nearby suburbs. There isn't any demand in the countryside. In the cities, prices are very, very high, and there's no supply. In the countryside, markets are in terrible shape because people are moving away to the cities. So even though that's a very healthy economic picture in the cities, the housing market itself can't take much in the way of increases. But the near-term hopes that rates are going to go down, I wouldn't stall on a refinance, I wouldn't stall on buying a house. I wouldn't expect that to happen because we need bad news to do that. And the source of bad news has been trade war, which is on hold now because the White House is immobilized. The White House is likely to be immobilized until something happens. The trade war is neither going to get worse, nor will the White House undo what it has done and make things better. In Europe, there is a substantial change from Mario Draghi, who gave us negative interest rates, which have worked a little bit. The jackdaws who are all up in arms about it are mistaken. But there's no future for going deeper. So rates in Europe have actually risen. Rates in Europe have risen almost 0.5% just in the last month on the understanding that they're not going to go more deeply negative. The new European Central Bank head is Christine Lagarde, who is French and among other things used to be a Chicago corporate lawyer. And she's smart, she's tough, and she knows that for Europe to move forward, the Germans have to begin to borrow money and spend it. So for the time being, my hunch is that rates rise over there in hopes that Lagarde can get the Germans to move. Unfortunately, no one ever has gotten the Germans to move about anything. So I have a feeling that the weakness in Europe is going to continue. Lagarde's not going to be able to fix it. Brexit doesn't much matter anymore because everybody's tired of it. And China is entering this awful stage of self-inflicted wound as it goes off into trying to recreate a 15th century empire with thought control of the kind that you'd find in Orwell's 1984. So really, mainstream, nothing much has changed. The world outside the United States, every place you look has difficulties. The United States itself is okay, but the political interval that we're in is so bloopy, it's hard to tell what effect that will have. But I certainly don't have bad news. There's no bad news about housing, and there's nothing wrong with mortgage rates stopping right about 4 and staying here for a while. So happy Halloween.